Well, Wendy's reporting earnings today, falling short of revenue estimates, but just beating profit expectations. Morningstar equity analyst Sean Dunlop was on the earnings call earlier today, and joins us now. We are seeing those shares under pressure right now in this session. What stood out to you? The big headline here coming out of the results today.
Yeah, what we're starting to see is a little bit more cautious of a U.S. restaurant consumer, and that's a concern that we've harbored for a little bit of time. So same-store sales grew 5.1% in the firm's home market. That suggested that it mostly maintained its share in the fast food category broadly, but did underperform both Burger King in the U.S., which had 8.3% comp, and McDonald's, which had 10.2% earlier in the quarter. So the reluctance of consumers to come into stores, traffic was a 1 point headwind, and then we see certain evidence of check management that certainly suggests to us that we're likely to see a bit more of a promotional environment moving forward, and maybe a little bit of difficulty driving durable comparable store sales growth over the rest of the year. That was probably our key takeaway.
Sean, what do you think of the pricing strategy here from Wendy's? Because they said that they're not going to be raising prices any further, at least for now. We heard from some of their competitors, like McDonald's, that they may begin to adjust some of their pricing to the downside here as inflation does ease in the second half. Does their pricing strategy up until this point, does it make sense?
I think it does. As you look at Wendy's core customer, they tend to skew a little bit less affluent than we see at some of the other chains. And they've obviously had a little bit more trouble attracting traffic, down 1% in the quarter relative to peers like McDonald's, who saw +4. So I think it makes sense to be very cautious, very cognizant of where the consumer is today. We saw the opposite example with Papa John's earnings, where they raised prices a little bit too aggressively, and where franchisees saw a negative 2.3% comp in the U.S. That's certainly something that restaurants need to keep an eye on in the current environment.
Yeah, so let's kind of broaden it out into the space sort of beyond Wendy's, because as you point out, consumers are getting a lot more price sensitive. When you look at this particular landscape right now, who do you think is best positioned in that way? Who's got kind of the sweet spot where you think consumers are looking to and willing to shell out money, even as these companies are able to juggle some of the costs that are still pretty elevated?
It's an interesting question. As we look back a couple quarters ago, we were saying that the operators that would be best positioned to navigate this kind of environment would be those that offered value-oriented fare. You start to think about the cheapest cost to feed a family of four, for example, some of the pizza players, or with McDonald's somewhat disruptive value menu offerings. We've seen a lot more incidents of barbell pricing, where you've got the value-driven fare like Wendy's Biggie Bag on the bottom end of the scale, and some of the more premium products to attract a clientele that's feeling a little bit less pressure. So in this sort of environment, we like restaurants that have sort of compelling value offerings. We like restaurants that have scale-driven cost advantages. You think about a McDonald's or Yum Brands that's able to generate a lot more leverage over suppliers upstream and over independent software providers. And so they're able to offer the same food at a lower cost with equal or better margin. And with the way the consumer's feeling today, that positions those firms particularly well.
Sean, we've seen Wendy's and some of its competitors also push a little bit further, push into late night offerings. It certainly seems like Wendy's is seeing early success within this offering. How do you see that, or how big of a build could Wendy's potentially see in this offering here in the coming quarters, and how quickly?
Yeah, I wouldn't necessarily expect it to move the comp materially. I mean, we're talking about a couple points of comp as you think about where the day parts break down. But the big news, I think, to take away from this is we're now at a point where the industry is only about 2% below pre-COVID staffing levels. We're starting to see wage inflation decline sort of into the mid-single digit range and declining month to month to month. So the hope is that this is reflective of an environment where restaurant margins are going to be pressured a little bit less, even as we start to see top line slow. And obviously commodity prices were a boost in the quarter, and for most restaurants will continue to be over the balance of the year, with maybe the notable exception of beef and potentially wheat.
Beyond the U.S., when you look at some of the international markets for Wendy's, how do you see that faring in this environment? How big of a driver do you think it can continue to be?
Yeah, a lot of markets outside the U.S., so it's very market by market. But it was interesting to see them ink the development agreement with Flynn. Obviously, they agreed to open up 200 new restaurants by 2034, which is relatively modest as you consider development agreements. But it is Flynn. Flynn is the largest franchisee in the United States. So it's interesting to see them push abroad with Australia. They also acquired 260 Pizza Hut stores, which they operate a large U.S. footprint of. With a lot of these international markets with Wendy's, it's challenging because Burger King and McDonald's already have substantial international footprints. That's true in Australia. And in most markets that tend to be smaller than the U.S. food service market, there's not necessarily room for three players within one category, like QSR burgers. So we struggle to see tons of upside in some of those smaller markets, like maybe in Australia or Germany or France.
Sean Dunlop, good to talk to you today. I appreciate the insight.